Let's talk about financial literacy for NGO staff members, right? Because a lot of times people don't know that it is not only the finance officer that needs to have financial literacy when it comes to non-profit management. I've seen some NGOs receive a major grant and still run into serious financial troubles. Why? Because funding does not always mean automatically create financial discipline. If only one person in your organization understands the budget, the reports, the receipts, and the donor rules, your organization is already exposed. Financial literacy means helping staff understand how money moves through the organization and how their daily decisions affect the budget. And no, this is not only for the finance officer or whoever is handling your accounts. The program staff need it. The project managers need it. The volunteers handling your project resources also need that training. In fact, every senior leadership member needs this financial literacy training. Now, what do? You need to start with the basics. Every staff member should understand the difference between a budget and actual spending. A budget is the plan. Actual spending is what really happened. So when these two numbers are different, your organization will need to explain why are the two numbers different. Now, please, staff should also understand restricted funds. What are restricted funds? For example, if a donor gives you money for a school project, the money cannot suddenly be used for office rent or a different program or an unrelated emergency without proper approval, because good intentions do not cancel donor conditions. Your team should also know the importance of documentations, because a payment without receipt, without invoice, without approval, without attendance records or supporting evidence can make you have serious problems during an audit. And please teach the staff that cash flow is not the same as income. Seeing the money in the bank account does not mean that all of it is available to spend. Some funds are already committed to salaries, to activities, to taxes, to vendors, and possibly future project milestones. Financial literacy also helps staff make better program decisions. They begin to compare costs, they reduce waste, they plan their programs early, and also negotiate responsibly. And understand how small financial mistakes can damage donor trust. The goal is not to turn every employee into an accountant. The goal is to create a team that respects money, understands control, and take responsibility and accountability seriously. Because strong financial management is not built by one finance officer working alone. It is built when the entire organization understands that every dollar, every CD, every naira has a purpose, and every expense needs evidence, and every financial decision affects your mission, both in the short and in the long run. So when your staff understand the numbers, your organization becomes stronger, safer, and even more fundable.